Okay, so here again today we are doing with the interest on loan. Sorry, not interest on loan. Loan account with the full plate sum. In the sum, they have mentioned to be revaluation account, partners capital account, and Kavya's loan account till it finally paid. Okay, so first I'll make the revaluation account. Then they ask us to make a partners capital account. And later on we'll do loan account also. Okay, so this is the revaluation account. And this is partners capital account. Okay. This is particulars. Okay. Particulars rupees 10. Okay, this is debit side and this is credit side. This is debit and this is credit. As per the rule, revaluation account debit side, if anything is bad for us, we record on the debit side. Anything good for us, we record on the credit side, right? These are the rules for the revaluation account. Bad on the debit side and good on the credit side, correct? Partners capital account, if you want to decrease the capital, debit. If you want to increase the capital, credit. Okay, let's start. The tick mark will be on fixed asset investment. Okay, I'll read the question one more time. Kavya, Manya, and Navita were partners sharing profits in the ratio of 50%, 30%, and 20%. On 31st March 2016, the balance sheet was as under. This is the balance sheet given to us. And on the above date, Kavya retires and Manya and Navita agreed to continue the business on the following terms. The firm's goodwill was valued at 60,000 and it was decided to adjust Kavya's share of goodwill in the capital account of the continuing partners. There was a claim for workman compensation to the extent of 4,000. But if you see in the liability side, there's no workman compensation, so we can do this directly. Investment were revalued at 2,30,000. So put a tick mark on investment. Next, fixed asset were depreciated by 10%. So we'll put a tick mark on fixed asset as well. Then e-adjustment, Kavya was to be paid 20,000 through bank draft. And the balance was transferred to a loan account, which will be paid into equal annual installment together with interest at 10% per annum. What they're trying to say here, what are the balance of Kavya? Because she is leaving the business, so we have to pay her dues on her retirement. But the firm doesn't have that much money right now, so they are paying 20,000 rupees right now on the date of retirement, and the balance will transfer to loan, and that will be paid in two equal annual installment together with interest at 10% per annum. Correct? So this is the sum. So now we'll start putting the values what we can put. Balance sheet we don't have, so we can't record this assets and liabilities anywhere. So whatever we can record in the revaluation and partners capital account, that we can record. So from the liability side, creditors we record on the liability side in the balance sheet. Okay, so we don't have that balance sheet, so we're not recording it. Then general reserve will distribute among partners in the retirement, in all partners in the old ratio. Before that, first we need to record by balance brought down opening capital balances, which is 6 lakh, 5 lakh, and 4 lakh. And then we distribute the general reserve on the credit side of capital account. as per the rule, reserves, if it is given on the liability side, get distributed on the credit side, and reserves, if it is given on the asset side, get distributed on the debit side of capital account. So this is given on the liability, that's why I'm distributing on the credit side 1 lakh in the old ratio, which is given it to us 50%, 30%, and 20%. So 1 lakh rupees, if I split in 50%, 30%, and 20%, I'll get the values 50,000, 30,000, and 20,000. Okay. After that, capital done, reserve done, liability side, nothing else we can transfer. Now, asset side, fixed asset, investment, stock, debtors, all these we'll record in the balance sheet. So we don't have the balance sheet, so we'll go ahead. Firm's goodwill was valued at 60,000. This is firm's goodwill. Then we'll remove Kavya's share of goodwill. $60,000 into what is Kavya's share? See, Kavya is the first partner. So this is Kavya's share 50% into 50% means 30,000. This 30,000 we have to split between other partners, which is Manya and Navita. In a sum, if any new ratio is provided, then we calculate the gain ratio to split the goodwill. But if no new ratio given, then we split in the old ratio. So what is the old ratio? See, 50 is gone because she is retiring. So these two is left. 30% and 20%. It means if I reduce the common zeros, I'll get, see, 30:20 is the ratio. If I reduce the common zero, I'll get 3:2. So I split this amount in 3:2. 30,000, if I split in 3:2, what amount I'll get? I just split it and check it. 30,000 divided by 5 into 3 is 18,000. And for this, 12,000. So for M, 18, and for N, 19. Means what? M and N will give this goodwill to K. Right? So K is getting the goodwill because he's leaving the business, so he'll get the goodwill. So when he's getting it, his capital will increase, right? So increase we always put on the credit side, correct? Increase we always put on the credit side. So I'll credit over here in a case column 18,000 and 12,000. Who's giving 18,000? M is giving 18,000. So M's capital account and 12,000 is given by N, so N's capital account. Correct? So we credited to K because he's supposed to get, that's why I credited. But other partner, we need to reduce their capital because they are giving it. So I'll write in M's column on the debit side 18,000 and N's column 12,000. And here I'll write to whom they are giving it? To K. That's why to K is capital account. I'll repeat. If I want to increase the capital here, if I want to increase the capital, I need to credit. So K is leaving, so he'll get the goodwill from the containing partner. That's why I credited. And if I want to decrease the capital, I want to debit. That's why I debited for M and N because the capital getting reduced because they are giving goodwill to the retired partner. Correct? Now, after that, after goodwill, what is given to us? There was a claim for workman compensation to the extent of 4,000 claim. So this claim means what? It's a liability. Liability arise. Liability arise is a good thing or bad thing for us? Liability arise is a good thing or bad thing for us? So definitely bad thing for us. So I'll record on the debit side of revaluation account because the rule of revaluation account is what? Debit side bad and credit side good. So here I'll write WCR claim 4,000. Okay. We don't have the balance sheet. That's why we are not giving the effects in the balance sheet. Generally, we give first effect in the balance sheet and second in the reval, but we don't have the balance sheet. That's why I'm directly giving a second effect in the revaluation account. Investment to be revalued at 2,13,000. If you see in the balance sheet, the investment value was given to us 2 lakh and become 2,13,000. It means it is appreciated. appreciated by 13,000. So when it is appreciated, asset appreciated is a good thing for us. That's why I'm recording on the credit side by investment, because good side of revaluation account is a credit. That's why I'm recording on the credit side. I'll record the amount which is appreciated, 13,000. Next, fixed asset were to be depreciated by 10%. If you see in the balance sheet, the fixed asset value is given to us is 8,90,000. So 10% of that, 10% of 8,90,000 is what? 89,000. So asset depreciated is a bad thing for us. That's why I'm recording on the debit side. Fixed asset, 89,000. After that, they say Kavya is to be paid 20,000. That will get after closing the account. So when we closing the account, first we close the revaluation account. How to close the account? First, we check the heavier side. The debit side is heavier. 4,000 plus 89,000 is 93,000. This 93,000 I'll put on the other side as well. And from this 93,000, I'll subtract the 13,000. Then I'll get 80,000. This is the loss for a business because your bad side is greater. So this we distribute among partners. So that's why I'm writing here partners capital account. I split between all partners K, M, and N according to their profit sharing ratio, which is 50%, 30%, and 20%. So if I split 80,000 in 50%, 30%, 20%, you'll get the values 40,000 for K, and then 24,000 for M, and 16,000 for N. So since I got this figures on the credit side, that will get recorded on the debit side to a revaluation account. 40,000, 24,000, and 16,000. Right? In the respective account, I recorded. Then I close the K's account first because he's retiring. So credit side is heavier, 6 lakh plus 50,000 plus 18,000 plus 12,000, which comes to 6,80,000. Okay. Now they have mentioned in the sum 20,000 they'll pay immediately. Now first of all, I'll calculate how much we supposed to pay. 6,80,000 is his credit side balance and 40,000 is on the debit side balance. So credit we have 6,80,000 and debit we have 40,000 rupees. So if you subtract the credit minus debit, you'll get the actual due, which is 6,40,000. Out of 6,40,000, 20,000 we are paying to retired partner immediately. That's why I'm writing here to bank, because we are paying to the retired partner in cash. So 20,000. Now after recording this 20,000, I'll subtract 6,80,000 minus these two to get the balancing figure, which is 6,20,000. For this, they have mentioned in the sum, it will be transferred to a loan account. So I'm writing case loan account, 6,20,000. Similarly, I'll close the other partners also. The credit side of the second partner is 5,30,000 and for third partner is 4,20,000. So 5,30,000 minus these two, 5,30,000 minus 18 minus 24 is 488. And for the third partner, 420 minus 12 minus 16 is 392. For these two partners, we'll write here two balance carried down, and this will go to the balance sheet as their capital. Right? Now, the first part of the sum is done, which is revaluation account and partners capital account. And after making these two accounts, we got to know that there's a loan of 6,20,000. There's a loan of 6,20,000. And for that also they have information given in the sum. This 6,20,000 rupees we have to pay in a 2 equal installment together with interest at 10%. So now we are going to learn the loan account. Okay. In the last class also we have done the loan account in the last session. Again, I will show you how to prepare the loan account. This is the format of the loan account. Is loan account. The columns are date, particulars. This tiny column is for LF, and then a rupees. Same column, date, particulars, LF, and rupees. This is credit side and this is debit side. Okay. So first of all, see, if you see the partner's capital account loan, we got on the debit side, right? We got on the debit side. So when I got on the debit side, we go to the credit side of the loan account. On the date of retirement, check what is the date of retirement given it was. She retires on the 31st March 2016, means we can say 1st of April 2016 by K's capital account. $6,20,000. In another session also I have mentioned loan. What is the loan account rule? If you want to decrease the loan, debit side. If you want to increase the loan, credit side. If you want to decrease the loan, debit side. If you want to increase the loan, credit side. Okay. Now, as per the sum, what they have mentioned, if you see the E adjustment, cover was to be paid 20,000 through bank draft, which we already paid 20,000 in this capital account, and now the balance was to be transferred to a loan account, which will be paid in 2 equal annual installment together with interest of 10% per annum. So now we have to pay the interest as well. Now interest, when we pay, they say annual installment means on the year end. So it starts from 1st of April 16, it ends on 31st March 17. I'll write here by interest on loan. Now the question is why I'm crediting. Why I'm crediting? Because interest on loan will increase the loan balance. That's why I'm crediting. And this is 10%. What is the loan balance we have? 6,20,000. 6,20,000 cut 10% is 62,000. Right? So now we'll decide the installment. We already decided in the sum 6,20,000. They have to pay in a 2 equal installment. That's why I'm dividing by 2. So 620 divided by 2 is 3,10,000. Right? These are the installment. So see, if you calculate the first installment, 3,10,000 is the principal balance, plus we just calculate the interest 62,000. So first installment will be 3,10,000 plus 62 is 372. This will be your first installment, which you are going to pay. Okay. So this, okay. Now payment, when we are making the payment to this K, the loan balance will reduce, right? Loan balance will decrease. And as per the rule, when we are decreasing the loan balance, it should come on the debit side. That's why I'm recording on the debit side. 31st March 17 on the year end, we'll make the payment. We are making payment. That's why to bank 3,72,000. Okay. Now we'll close the account. In a similar way, first we'll do the total of the greater side. 620 plus 62. 6,20,000 plus 62,000 is 6,82,000. And I'll put on the other side as well, 6,82,000. From this, I'll subtract 372. Then I get 3,10,000. This 3,10,000 will be considered as two balance carried on the last day of the year, 31st March 17, and this we carry forward over here, 1st of April 17 by balance brought down. 3,10,000. Okay, the first year is completed. Now second year. Again, First, we need to pay the interest. So again, interest will increase the loan balance on the year end 31st March 18, second year, by interest on loan. So now we have loan balance left is 3,10,000. So 3,10,000 we will charge interest at 10%. Okay, 3,10,000, 10% will be 31,000. So second installment will pay 3,10,000, which we decided principal payment plus interest is 31,000 for this year. So 310 plus 31 is equal to 3,41,000. So this year we'll pay 3,41,000. When we're paying, it will again reduce the loan. That's why I'm debiting 31st March 2018 to bank 3,41,000. Then if I close this account, both side is 3,41,000. So no carried on balance is left. So it's balancing. That's it from the loan account. I hope you understood everything.